Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today we will take a look at technical analysis for Tesla, and if we have time toward the end of the video, I will be touching on a couple of other technology stocks, including Facebook, Amazon, Google, and the like. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Here's the daily chart for Tesla. As we can see here, Tesla is now staying in between 200 days SMA, which is now at $821, and 50 days SMA, which is $1,012. It's almost right in the middle between the two simple moving averages. The volume for today was 71% and the volume for Friday was 85%. So Tesla has been moving below 100% in volume. So the day after earnings, Tesla had major sell volume, and then the couple of days after that, Tesla also had volume above 100% with predominantly buy volume. But over the last week or so, Tesla's volume sort of died down a little bit, tracking between 70 to about 90%. So it hasn't been super high volume for the stock. I think that the vast majority of the attention in the tech sector has been focusing around Amazon, Google, and Facebook. So probably that's the reason why Tesla hasn't been getting a lot of attention. Right now, Tesla's sort of in no man's land. The 50 days SMA and the 200 days SMA here at $1,012 and $821 respectively. If you look at the length of the candles for the last 2 days, it does look like dark cloud cover, which is very bearish. Now, it is not entirely dark cloud cover because Tesla didn't start the day high and then ended the day low. But if you look at the entire candles, including the wicks, then it does look like dark cloud cover. So if I were to theorize for a little bit, if this is indeed dark cloud cover, it is very bearish and Tesla is going to fall back down to at least $853, could also be $821. If this is a consolidation to move higher, then the upper end would first have to reach $967. Right now, $967 seems a little far-fetched in my mind, given the very much bearish daily candle today. If you look at Friday's price action, it was really encouraging, and I had every reason to believe that Tesla would be shooting higher today. And Tesla did move much higher in the day. At the high point, it was around $947, but it could not hold that level. So right now, if you also look at the turquoise dotted line here, this is a 9-day exponential moving average, and the darker blue dots here is 21 days EMA. So usually when a stock moves down vigorously below 9-day EMA, it tends to move back up, pull right back to just 9-day EMA, but without surpassing 21-day EMA. This just means it has a bounce and it's going to fall back down. Now, if Tesla can somehow make it to above this blue dotted line right here and stay above that, namely above $967, then I would think that Tesla would reverse successfully. But right now, since it's still dancing just around 9-day EMA here, it seems to me that it wants to go back down further. And right now, a very strong support is $821. If Tesla loses $821, then the next support would be $738. That is not good. So let's hope that Tesla doesn't move down first below $853. And if it does move below $853, it would bounce really hard at $821. Overall, on the daily standpoint, it still looks to be consolidating. It doesn't give me any major warning sign aside from the dark cloud cover hypothetical here. And again, dark cloud cover here is based off of these two candles. It's not very evident. It was just a hypothesis if you are looking at the entire length of the candle, which it did have wicks on both ends. So it might not be correct the way I look at it, but just planning for the worst here. On the other hand, Tesla holds on to $904 very well, and it has been holding on to it for 6 days in a row. 904 is also a very decent support from the last time it moved down. So I think that if it bounced off of 904 and get back to above 967, then we have some hope. We have a little bit of an RSI divergence here for the last couple of days, but it's not too strong, too prominent at this point. For all intents and purposes, Tesla is still just consolidating, and it could move either direction in the next couple of days. Here's the hourly chart for Tesla. As you can see that for the vast majority of the day, Tesla danced around the middle pivot point here, which was around $914. Tesla reached a pre-market high at around $948, but could not hold that level and then move down further. At the height of the day today, Tesla reached $948. It never got anywhere near the upper pivot point at 968. It retraced immediately after it reached about 948, touched the bottom pivot points and consolidate right around there. The pivot points for tomorrow on the upper end is 964. The middle pivot point is 919, and the bottom pivot point is 890. So we don't see a doom and gloom day tomorrow based on the trading range suggested by the pivot points. On the hourly chart, we also see a oversold condition on the hourly here, so I expect Tesla to bounce first thing in the morning. Now, given the uncertainties around macroeconomics environment and the fact that Tesla has been consolidated for the last few days, I think that it is not wise to hold on to any short-term call options. So even if we have to cut loss, I think it might be wise to do so and wait for the right opportunity. Tesla right now is waiting for a catalyst to spike. Any excuse to spike, because it does want to spike, but macroeconomics environment does not cooperate right now. As you can see that the consolidation has been going on for the last 6 days, give or take. After Tesla moved down vigorously after earnings, it has bounced strongly and consolidate. Usually the stock consolidates to move up further, but if there's pressure to the downside by macroeconomics, then it could potentially move down further. So at this point, because Tesla is in the middle of the two major simple moving averages, it is really hard to say if Tesla is going to go up or go down. Tesla needs to pick a direction first, and for Tesla to resume bullish, it needs to stay above 967. Otherwise, below 904, I think Tesla would be slightly bearish, and below 853, Tesla will be very, very bearish. If you look at the overall chart here, it does look like Tesla has multiple tops and it has not been able to bounce back up. Even if Tesla bounced to above $1,012 and get to $1,100, it will face another resistance, and it has multiple tops at that level as well. Only until Tesla gets to above 1189 and hold above that's when I say Tesla could resume bullish vigorously. But I don't see that right now. I think that Tesla needs to first get to above 968, which is a big if at this point. Overall, I don't think macroeconomics environment cooperate. The 10-year treasury spiked really hard on Friday, so that could be part of the issue why the market could not rise significantly. Even Amazon, if you think about it, Amazon had over 15% run on Friday after earnings, but it could not hold that today, and is still predominantly below 50 days SMA right now. This candle for Amazon is definitely not a good candle. It is a failed rocket launch, and it could not make it to even close to 50 days SMA right now at $3,264. And Amazon has a very big gap to fill. To fill this gap, it needs to get back to approximately 28.38. So I think in the coming days, Amazon could easily fill that gap before deciding where to go next. So even Amazon, a fairly strong stock, at least as of Friday, could not hold this level today. At one point today, Amazon was up $100, and then it lost all of that and retraced back to up only about $6 into close. So this is definitely not something that we want to see as investors, but also this is also a short-term issue that will soon come to pass. We just don't know when it will pass and where the bottom will be, but my hopeful thinking is that in the next couple of days, the 10-year treasury will adjust itself and we could get back to a more stabilized situation. Let's take a look at Facebook. This is a painful picture for Facebook, and this is certainly not the first time Facebook dropped about 20-30%. If you remember the Cambridge Analytica scandal way back, I believe in 2018, Facebook also dropped dramatically 20+% in a given day. Here after earnings, Facebook dropped from $322 down to ending the day at around $237, and today it proceeded to lose another 5% or so. So right now Facebook is in bearish territory for sure. A death cross was formed back in early December, and we thought January was pretty bad for Facebook, but it seems like it could not catch a break. So I firmly believe that the gap from $245 to $324 will be filled at some point in the near future. I don't know exactly when, but I do think that it will be filled. And so this is a good opportunity for short-term trading in Facebook. If you want to ease in some shares, you can do so. For options, you probably want to wait a little bit longer. Although right now, we're looking at oversold territory already for Facebook. So it's just a matter of time before it bounces. So Facebook has been a decent stock. The company has been pretty strong in terms of financial position, but it could not withstand a weak set of guidance by the company's CFO over earnings. So my take on Facebook is that it could go down a little further, and I think the floor could be right around $210. So it has another $14 to go before it will bounce. Although right now, I wouldn't be surprised if it bounced a little bit in the morning before tipping back down. At $210, I expect Facebook to bounce hard, and that could be a good opportunity to enter call options at that point. But we will have to see how macroeconomics environment cooperates, because so far it has not cooperated with the bulls and has been causing a lot of bruises and headache among investors, especially technology stock investors. Here's the daily chart for Netflix. Netflix too has formed a death cross a couple of days ago on the 2nd of February, even though the stock was bullish for about 2 days before that. This is a prediction of a little bit more downside in the near future, so watch out for Netflix as well. It seems like the 50 days SMA right now at $545. However, the 200 days SMA is around $553, and Netflix trades well below both 50 and 200 days SMA, which is not good. It's definitely bearish. There is a RSI divergence here, which signal that Netflix could potentially tip back up and move further. So for the next few days, we have to keep an eye out for Netflix. It does too have a very big gap to fill, from $403 all the way up to $507. So that is about $105 from where it closed today at $402. So I think that it's just a matter of time before Netflix tip back up, and if it is above $431, that might be a good opportunity to carry a call option for it to go all the way back up to $507 to fill that gap. Overall, I think with the technology sector, everything is very much oversold, waiting for an opportunity to bounce, but for some reason, it cannot bounce significantly. If anything, it start out the day really green, but then end the day still in the red or flat. So I do think there's a very strong force of sellers out there that want to exit the market or just want to get out of stock market right now. And so we'll have to wait and see what the next couple of days will bring. But right now, entering any call options without any clear direction of an imminent reversal is a very tricky game. Shopify here also had a death cross formed at the end of January, and it has been trading at the bottom at right around $800, give or take, over the last few weeks. Today it moved up a little bit, but it still ended the day in the red. The candle also doesn't look super promising. It's very similar to Tesla in a way, although it's very hard to see these two candles here, but they also look pretty bearish. I think that if Shopify gets back to about $990 in the next couple of days, then it could form a W, which means it could have multiple bottoms here and then spike further. Right now, it needs to trade above 1225, which is 50 days SMA, for it to resume bullish, which I don't see that happening anytime soon. I do think that it could get back to about $900 or $1,000 within the next couple of days, but then it might potentially fall back down. Shopify is one of the stocks that I think is highly volatile. It's great for trading, but we have to be also very careful with it because when it moves down, it doesn't stop easily, right? If you catch the wave, either a bullish or a bearish wave, that's really good. So for example, if the beginning of January you enter put in Shopify, it would have been printing like crazy. So what we're doing now is to catch the wave where Shopify is going back up. In order to do that, Shopify needs to have a very bullish day, getting back to around 980 in order for me to have any hope that it could turn around. Otherwise, I will just be watching Shopify.